Welcome to Alternative Investments Chat,
where we demystify the world of alternative investments and financing for entrepreneurs and investors alike.
With these discussions, we hope you're more empowered to unlock opportunities in your business or portfolio. I'm Erin.
And I'm Erica. Let's get started.
Welcome back. Today, we're going to be talking about the dark side of investing, people who scam.
That's right. And we're coming straight out of a Netflix documentary here.
Love.
We're going to explore real world frauds that cost investors billions and what we can learn from them today.
Yeah, absolutely. So the first recorded instance of someone scamming money by falsely claiming it was for investment purposes is actually difficult to pinpoint, right?
Yeah.
People have been doing fraud for millennia. So
Ever and ever.
Yeah. Since the dawn of time. So in fact, actually, we have a case documented as far back as ancient Greece and Rome. There was a sea loan fraud in ancient Greece. This is about 4 BCE. Merchants took advantage of shipping ventures, but either disappeared or falsely claimed that their cargo was lost at sea. Convenient.
Convenient, yeah, exactly.
It is said that this case of fraud resembled Ponzi-like schemes, which we'll go into detail some more. We've been teasing that a little bit, so we'll talk about that. And also, there was the Corpus Vesuvianum scam in the Roman Empire in the 1st century CE. And this was after the eruption of Mount Vesuvius. Fraudsters collected money from investors, claiming that they would recover buried treasures from Pompeii and Herculaneum, but kept the funds for themselves.
People.
Yeah.
Gotta love ruthless people. Take advantage of somebody in their time of need.
Right.
A mountain explodes, you lose your stuff. Someone says, let me help you. And
then they just take the money and run.
Bounce. Oh, I hate that. So it just goes to show that fraudsters have likely existed since the dawn of commerce.
Yeah, totally.
If you can make money, they're going to try to figure out the easy way or take it from somebody else, right?
Yep.
So you mentioned the Ponzi, and most people have probably heard the term Ponzi scheme, but did you know that Ponzi was an actual person? Okay, so this guy's name is so long and hilarious to me personally. So his full name is Carlo Pietro Giovanni Guglielmo Tabaloso Ponzi.
Oh, okay. Yeah, let's just keep it with Ponzi. That's easier.
Well, yeah, he was an Italian immigrant who came over to the U.S. in 1903. So he claimed that he could profit from international reply coupons, IRCs. It was a type of U.S. postal voucher.
Okay.
So he told investors what he could do is he can go buy those RICs really cheap in Europe, exchange them for a U.S. stamp, and then for the higher value, and then turn around and resell them for a massive profit.
Okay.
He was guaranteeing 50% returns in 45 days.
Yeah, that's not good.
100% in 90 days. So we obviously know this was not what was really happening.
Right.
So instead of investing the money, Ponzi paid early investors with funds from new victims.
Right.
This created the illusion of success, which made more people want to invest, obviously. Thankfully, there was a financial journalist who exposed Ponzi, and he was arrested in 1920. He spent years in prison. He was deported back to Italy and eventually passed away penniless in 1949. His name is now, again, synonymous with financial fraud, hence the term Ponzi scheme.
Wow. Well, it just goes to, make you think like, this is a guy who's obviously pretty smart, right? Could you imagine if he applied that to like actually doing something that was legal and, decent?
Yeah, I think about that often.
Yeah, instead of just taking people's money.
Yeah.
Maybe then he would have passed away with some money instead of dying penniless, which is really sad. But unfortunately, we know history loves to repeat itself. So I'm going to touch on 2 notable schemes that we shouldn't forget about. So first one is Alan Stanford and the Stanford Financial Group fraud. Alan Stanford is a Texas billionaire and financier. He was the founder of Stanford Financial Group, and that operated from the 1980s to 2009. He claimed to run a legitimate offshore investment firm in Antigua that sold certificates of deposit, or CDs, He was promising high, safe, consistent returns. Here we go again with these promises.
Yep.
Turns out he was doing exactly what Ponzi was doing, robbing Peter to pay Paul. His scheme cost over 118,000 investors to lose their money. That's a lot.
That's a lot of people.
Horrible. And all in all, he defrauded people out of $7 billion. Can you believe that?
Yeah, that's a lot of money.
Yeah, it is. It is a lot of money. The craziest part is that this guy isn't even considered like the number one fraudster. You may have heard of Bernie Madoff. Lots of people know this name. And me, in fact, I actually didn't know all that much about what he did. I just knew Bernie Madoff, bad guy.
Yep.
You know what I mean?
Yep.
So I'm sure that we've heard the name. We know maybe the gist of his crime. Maybe you do, maybe you don't. But here's a quick rundown just in case. He was a trusted financier again. Served as the NASDAQ chairman in the 90s. Crazy, right?
Yeah.
He was promising. We need to
go.
stop with the promises. A steady annual return of 10 to 12%, even in bad markets.
I wonder how that works.
Right. So turns out he wasn't actually investing the money at all. Love that. Not the first and certainly not the last to do this.
Nope.
He would send investors fabricated account statements showing fake gains. Madoff was arrested in 2008 after he actually confessed his crimes to his sons, who turned him in.
Good for them.
I know. They've got a sense of, morality, a strong sense of a moral compass there. But the scale of his scheme was to the tune of $17.5 billion.
Can't even imagine that.
It's a lot of money.
Yeah.
A little bit of good news is that there has been about $14.5 billion reclaimed for the victims.
Yeah.
So that's nice.
That's really great.
He actually passed away in prison in 2021. If you're interested in all the details, Netflix has a documentary, so you can go ahead and stream that and learn all the dirty details of the scheme. So how do you avoid getting yourself into a Ponzi scheme?
Yeah, that documentary, for the record, is wild. It's like a multi-part documentary, and there was so much to learn from that. I was like, holy cow, I had no idea. Again, can you imagine he had two businesses technically, one doing the right thing, and the other one's like just pure, just scamming everybody and anybody, and that sucks. Again, because he would have just taken that mindset and put it towards good, he probably would have had all that money and been able to keep it.
Sure. Yeah.
So, but one thing I want to make really clear here is that you don't have to be less educated, or you don't have to have,
less money,
tons and tons of money, to what I lovingly quote unquote accidentally get yourself involved in a Ponzi scheme.
Yeah.
So, for example, some of Madoff's victims actually included Steven Spielberg, Kevin Bacon, and the Eli Wiesel Foundation. Eli Wiesel he is a writer. He's a Nobel winner. And a Holocaust survivor.
Wow.
And so he has a foundation. So that foundation got scammed out of money too. So again, this can be anybody.
Yep.
But here are a few quick tips that can be helpful. If it's too good to be true, even a steady 10% return are suspicious.
Yeah.
Again, if you hear that thing, if you just think to yourself, it's too good to be true, again, run. Verify the strategy. So Madoff refused to explain his secret sauce. He didn't want to tell anybody how he was being so successful. He kept it all, I don't know if he kept it in his head or in a file cabinet or whatever.
Right.
But he wouldn't let anybody in on the formula.
Right.
And that is shady. And then again, diversify. Many investors lost everything because they trusted a genius per se.
Mm-hmm.
They're like, this guy is awesome. He keeps giving me all this money, all these returns. Everything looks great.
He's way smarter than me.
Yeah, he's so much smarter than me. I gave him all my money. And then they were left with none, unfortunately.
Yeah.
So let's shift gears and talk about something I know I've seen in the news lately, and that's cryptocurrency scams.
Totally. Yeah. So crypto scams have surged, as I'm sure you can imagine, right? They actually do kind of a similar thing, lure investors with fake projects and those high returns, which is attractive. Cryptocurrency is a digital or virtual currency that uses cryptography for security and operates on decentralized networks, typically blockchains.
Exactly.
Unlike traditional money like the US dollar or the euro, cryptocurrencies are not controlled by governments or banks. Some people think that that's a good thing. Some people aren't so sure.
Yeah.
Crypto is still so new, so we're still learning about it, kind of.
Exactly.
One thing that we know for sure is that some use that lack of protection you get from banks to take advantage of people. And people who are really interested in crypto might fall victim to certain scams.
Yeah, that's right. So there's a prime example of one of these scams called OneCoin, or it was, funnily enough, coined. Here we go. The crypto cult. So it started in 2014 by, her name was Raja Ignatova, aka the Crypto Queen.
Ooh, I like that.
It was marketed as a Bitcoin killer, but no real blockchain actually even existed. They recruited like a multi-level marketing, meaning that members earned commissions by bringing in new investors. Okay, so there we go.
You put
pyramid.
You put one person here, you have to get two people under you. Okay, but then all they have to do is get two people under them, and then what shape does that start to make? Unfortunately.
I think that's called a pyramid.
Yeah.
Yep. So what she was doing, she was selling fake educational packages that include tokens, which were converted into OneCoins. These were all fake, obviously. They claimed that OneCoin was going to list on major exchanges. That never happened. And now here's where things get actually, my personal opinion, really interesting. In October of 2017, Raja just vanished. She gets on a plane and she is never to be seen of again. In fact, she's still missing. She is on the FBI's 10 most wanted list.
Oh my gosh.
And it is actually rumored that she is dead.
Yeah. If you've been missing for that long.
I don't know. This lady's pretty smart. But yeah, I think her bounty's at $5 million right now. So let's run and see if we can find her.
Yeah, we're in the wrong business. We need to be in the
bounty hunters. No one would suspect us.
Yeah.
So in 2019, a BBC's podcast called The Missing Crypto Queen, there we go, actually exposed this scam.
Wow.
So Raja's brother, Konstantin, he actually was the one who took over after she fled. He got arrested. Sebastian Greenwood, who was the co-founder, got arrested.
Wow.
Mark Scott, OneCoin's lawyer, he got arrested. Money laundering.
Oh my gosh.
And they can't find homegirl, but they got all of her associates. So this scam is estimated between 4 and 15 billion was stolen. The exact amount is not known because of the global scale. Most of the funds vanished. However, there was roughly about 100 million that was recovered in Bulgaria.
Still, that's not that much compared to what was...
billions, millions. Yeah, no, trust me, I'm with you.
Wow. That is truly wild. And I know you love that little piece there because it's a little bit of like true crime story there. So the worst part is that she was not the only one to use this particular method to steal money from investors. If you want to take a deep dive, there's unfortunately many other stories that you can look into. So here's a few other cases. BitConnect, $2.4 billion stolen. Plus Token, $3+ billion stolen. And FTX, $8 billion stolen. So you can, people are a little skeptical about cryptocurrency, and this unfortunately contributes to that. So here's a few tips on how you might be able to avoid falling into some of these scams. Be cautious of new crypto projects with no clear use case, and avoid exchanges with poor regulatory oversight. Do your own research, of course. Don't ever trust the guaranteed profits just for any investment.
Yeah.
That should be just something that you know.
They say that G word.
Yeah, walk away.
Yeah. Guaranteed it's never guaranteed.
Never guaranteed.
We know this.
Exactly. And be aware of an anonymous team. Like, don't trust that. You should be a little sus about that, right?
Yeah.
If they don't want to be seen or known, there might be a reason why. So just beware, put a face to the name, and make sure that you know who those people are. We know that crypto remains an experimental space, so invest only what you can afford to lose. There are people who have had great success with it. There are people who have not.
Yeah.
And, investments have risk. So That's just part of the game. So be aware.
You're absolutely correct. And fraudulent schemes existed even in the traditional markets. Because I know we sometimes think that they only exist in these alternative space, but that's not the truth.
Right.
Stock market manipulation has existed as long as the markets themselves.
Right.
So powerful players often rig prices, spread false information, or exploit loopholes to profit off of others' expenses.
Totally.
So a prime example of that was Jordan Belfort, or better known as the Wolf of Wall Street.
That's right.
So Belfort's brokerage firm artificially inflated penny stocks through aggressive sales tactics, then dumped shares, leaving investors with a worthless stock.
Yeah, absolutely.
This is known as pump and dump. And the estimated losses here were 200 million plus.
Yeah, that's a lot of money.
That's a
great movie too.
Yeah.
With Margot Robbie and Leonardo DiCaprio.
If you have 3 hours of your time.
Yeah.
Did you know, I literally, as I was doing the research for this episode, because it's Leonardo DiCaprio and I knew that this movie was great but long, I did some research on the runtime. Did you know Titanic is 3 hours and 15 minutes?
Oh, no, I know.
So Wolf of Wall Street is literally 15 minutes less than Titanic.
Yeah.
Just anyone if you want to spend some time.
Taitanic's my most favorite movie, so I know that.
Leo knows how to make very, very long movies.
He does, and I love Leonardo DiCaprio, so he can stay on screen as long as he wants.
There we go. Okay, fair enough.
I will definitely watch his movies.
Yeah.
So as you can imagine, scamming doesn't stop there.
Nope.
So we can look at some more recent examples of some scams. This is one that if you hear this, I'm sure it, sends a little shiver down your spine, and that's Enron.
Dirty word. Don't say that.
Exactly. Yep. This accounting fraud is said to have shook Wall Street. Got to do a lot to do that.
Yep.
So executives hid debt in offshore books, shell companies, while falsely reporting profits.
Seems to be the norm here.
Seems to be the norm.
Buying stuff.
Yep. By booking future profits immediately, a tactic called market-to-market accounting, Enron appeared like it was profitable, of course.
Yeah.
We don't have to get into all the other details, like how Enron manipulated the California energy market. We'll leave that to another time. But if you are interested in learning more, there's actually a documentary called Enron, the Smartest Guys in the Room, streaming, and you could check that out.
Yeah.
There's also another one that I want to spotlight that actually affected the retail investor. This is one that you might have heard before, and this is Reddit versus Wall Street, or the GameStop short squeeze.
Yes.
Lots of people have heard about it, right? Yeah. It was all over the news recently. So this started when Melvin Capital shorted the GameStop stock, GME, by 140%, thinking that GameStops were going to be shutting down for good.
They thought all those brick and mortar buildings were closing. No one was going in there. Who goes to a shop to buy video games? Half of them you don't even need to buy anymore. You stream them to your console.
Yeah, it's a little bit of an archaic, model. So with the help of Reddit, user Roaring Kitty, investors realized that a short squeeze was possible and bought GME stocks in mass. Crazy. Picked them up. GME stocks skyrocketed from $20 a share to $483 in just weeks.
I can't, that just is mind blowing.
It's crazy.
To me, I love this, but keep going.
So Melvin Capital ended up collapsing because they couldn't cover the shorts at inflated prices. Robinhood, which was an investment platform, I'm sure you probably heard of it. They blocked the purchase of the stock, but would allow you to sell it as they were trying to protect the hedge funds, because that's who they were partnered with.
Yeah, of course. I remember this, that people were livid because they couldn't buy, but it was, and they're like, I believe Robinhood was like, oh, it's a glitch, but they had purposely closed it off.
Yeah,
because
protecting their people.
Yeah,
for sure.
Of course, you're going to protect your investors.
Yeah, absolutely. So some investors made money, as we know. Some were really successful with that. But majority of the retail investors jumped in too late. By the time that things were already popping off, there wasn't a lot of money to be made. In fact, people ended up losing a lot of money.
Yeah.
So GME eventually crashed and retail investors felt cheated. For a while there, it was feeling like, oh, this is a win for the little guy. People were really excited about it. There's kind of like this, huge hedge funds, very wealthy people versus the, average retail investor kind of going head to head.
Yes.
But it didn't work out for everybody, unfortunately.
No. And then the great thing about that was just people were investing, smaller amounts because a retail investor, you don't have to be accredited. You don't have to have this high net worth. And so, but they were seeing the rise and they were investing all of their savings.
Yeah, unfortunately.
And it really ended up in the toilet. Like there's several documentaries and there is a fictionalized movie about this as well that are extremely interesting. And they actually interview some of the real investors, and it really, like, a lot of them, they're still now, they can never financially recover from this.
Yeah, it's horrible.
What is that guy named? I almost said Joe Dirt, but that's not him. Joe Exotic.
Oh, Joe Exotic.
Like, I will never financially recover from this.
I do remember that.
That's unfortunately what that is. Now, here's the crazy part. Did you know that GameStop wasn't technically a scam?
Right. So tell me about that.
Yeah.
How?
Yeah, exactly. Right. Because people lost a lot of money. So it was classified as a market revolt, exposing the fragile nature of Wall Street.
Mm-hmm.
It did, however, enact new SEC rules that tightened short selling disclosures.
Fair.
So at least that came out. And it provided the small investors, it proved that small investors can disrupt Wall Street.
Right.
Pennies can really mess you up, and you don't really think about it. But if you've got everybody investing, it can really mess up the NASDAQ and the S&P 500. Okay,
crazy.
So things we've learned from this is, again, avoid stocks that are artificially inflated by hype. We talked about this in the last episode. Don't just jump on because everyone's doing it.
Yeah.
Understand the mechanics of market manipulation before investing.
Right.
Okay. So somebody should explain GameStop. They weren't going to save these buildings by buying the stock.
Right.
So what were you doing?
Right.
Okay.
That's a lot of people who didn't know a ton and invested a lot.
They're like, oh, this is only $20 and now it's worth $400. But then they're like, oh, it's got to go up. It's going to go up. It's going to go up. And then all of a sudden it just boom, and down it went.
Exactly.
So now that we provided you with a ton of movies and documentaries to fill your weekend, let's recap this episode.
Totally. You can thank us for your binge watching this weekend.
Exactly.
So we know Ponzi schemes and cryptocurrency scams continue to prey on uninformed investors, unfortunately. Stock manipulation and fraud exist even in traditional markets. Even if you're going, quote, the traditional way, or maybe as you might perceive it, the safer way, it's not necessarily the case, right? Make sure that you do your research, verify financials, and never rush into investments based on hype. If things are, here's a way to think about it, fashion. Let's talk about fashion for a second. Trends that are really cutting edge and popular in New York, by the time they make it to the Forever 21 in Phoenix, Arizona, the people in New York aren't wearing that anymore.
No.
You know what I mean? So it takes a while for the population en masse to learn about these trends. And more than likely, by the time you hear about it, it's probably too late for you to really profit off of it. Of course, do your research. That might not always be the case, but just be skeptical of these big trends that occur. Yeah.
So the best way to avoid scam is to learn from the past. And, history keeps repeating itself in just different forms. We know this.
Mm-hmm.
I mean, we've seen it. There isn't just one scam.
Right.
There isn't one Ponzi.
Right.
It keeps happening and happening and happening and happening and happening. So be a little wary.
Totally. Yeah, exactly. Well, thank you so much for tuning in. Remember, if an investment is too good to be true, it probably is.
Yes.
Maybe share this with a friend who might find this interesting. And don't forget to like and subscribe, and we will see you next time. Thanks for joining us. Stay tuned for more insight on our next episode.
And don't forget to subscribe to continue the Alternative Investments chat. See you next time.
Content provided in this podcast is for informational purposes only and should not be construed as professional, financial, or investment advice. This podcast should not be construed as an offer to sell or a solicitation of any offer to buy any securities. We strongly recommend that you seek advice from a qualified professional before making any financial decisions.